Hi friends, welcome to the module of GST Assistant Level 1. Friends, we all know that taxes are important revenue receipts for the government, and GST, that is Goods and Service Tax, is one of the most important taxes, and almost all major companies that you go will be having a separate department dealing with GST. And if you also search that GST assistant job in Mumbai, you will find more than 1000 plus jobs just in Mumbai and one job portal. So this is how this module is important. So to cover this job profile, we have two modules. In module 1, we will try to cover all the GST related concepts, and in module 2, we will cover the GST return filing aspects. Friends, since this module is so important, we will be going to teach you the GST related concepts in the form of story. This will also make it interesting. So let's begin our story. This story is of the king named Goods and Service Tax, and people used to call him GST. Friends, before GST there were multiple rulers like King Excise, King VAT, but after a long war, brave, smart and intelligent king GST emerged victorious. So finally on 1st July 2017, King GST was officially declared as king. After becoming king, GST was responsible for undertaking the welfare of people, making sure that their requirements with respect to free education, defense, good infrastructure is met. And for all these expenses, he decided to collect taxes from everyone. But now the question comes, taxes on what? So let's look at it. King GST decided to collect taxes from those who are selling goods and services and receiving money. Friends, the aspect of receiving money is very important, because if you are giving someone a good and you are not receiving money, then GST is not applicable. So the aspect of receiving money is important. That's first. Second, GST is not collected from everyone, only from those who are exceeding a particular turnover limit. For example, for goods, it's 40 lakhs and for services, it's 20 lakhs. So if someone is providing services of over 20 lakh rupees in a year, then he is liable to pay GST. Also, there are certain special category states like Sikkim, Manipur, etc., where these limits are half, that is 20 lakhs for goods and 10 lakhs for services. So friends, there were certain smart businesses also in his region, and king observed that what they were doing, in order to avoid tax, they were giving goods, they were selling goods, and instead of taking money, since receiving money is an important part, what they were doing, they were receiving goods in return. So it was like a barter exchange. So the smart king observed this and he changed the law. He said that taxes will be paid not just on sale, but also on barter exchange, licenses, rental agreement and disposal for consideration. Here the consideration means something in return and not necessary money. So if you are receiving goods also in return, by giving goods or by providing services, you have to pay taxes. Apart from this, there are certain cases which king specifically mentioned that in those cases one has to pay tax. For example, if you are importing a service for a consideration and if you are not doing business, in that case also you are required to pay tax. So to conclude, GST is collected on supply of goods and services only if the turnover exceeds the given limit, and not just sale, but supply also includes barter, exchange, lease, rental. And two things are very important to collect tax. First is business and second is consideration. And what does consideration mean? Something in return, not necessary money. So now let's look at the administration of king. King GST has 4 kids: IGST, CGST, SGST and UGST. These are their short names. So their actual names were Integrated Goods and Service Tax, Central Goods and Service Tax, State Goods and Service Tax and Union Territory Goods and Service Tax. Since the area was big, king divided the responsibility of collecting tax among all the 4 kids. For example, IGST was responsible for collecting tax if the transaction is happening between 2 states, and also when a company is importing a good or services from another country. And CGST and SGST were responsible for collecting tax if the transaction is happening within the state, and once they collect, then they used to divide the tax equally. For example, if tax rate is 18%, then CGST will keep 9% and SGST will keep 9%. Similarly, if the transaction is happening within Union Territory, then UTGST and CGST will be responsible to collect tax. And similarly, they will collect tax at one rate, for example 18%, and then will divide among themselves, like UTGST will keep 9% and CGST will keep 9%. So let's take 3 examples to understand this better. Example 1, suppose you have a business in Maharashtra and you are selling goods to a business in Punjab and the rate of tax is 18%. Here who will come and collect tax? IGST. So IGST will come and collect 18% because it's an interstate transaction. Now suppose someone came to your shop, you are in Maharashtra, your shop is in Maharashtra, and someone came to your shop and purchased the goods. So here again the tax rate is 18%, but who will come and collect? So CGST will collect 9% and SGST will collect 9%. Now suppose your shop is in Manipur, which is a union territory, and you are selling goods to someone at 18%. So here who will come and collect tax? So UTGST will come and collect 9% and CGST will come and collect 9% because it's an intrastate transaction. So to conclude, if it's an interstate between 2 states, then IGST will come and collect. But if it is an intrastate or within union territory, then CGST will come and collect with tax along with SGST or UTGST. Now the question comes, at which rate the tax is to be collected? Friends, this was one of the most challenging and intellectual decision taken by the king, because there were thousands of goods and services which were required to be covered, and charging a single rate of tax on everything was not logical. Just think, necessary products like medicine or food items should be charged less, right? And some luxurious goods like car, refrigerator should be charged high, right? And that's why finally king decided to come up with 4 rates, which are 5%, 12%, 18% and 28%. Friends, there were around 1300 plus goods and 500 plus services which were classified in either of this group category, apart from certain goods and services which are exempt. And you are not required to remember the list of all these goods and services, because you can check them whenever you want. But what you have to learn is what are the major categories of goods and services which come under each of these rates. For example, which category of goods falls under the rate of 5%, then 12%, then 18%, 28%. Let's begin with exempt goods. Exempt means tax is not payable. This includes goods which we regularly consume, like fresh fruits, vegetables, milk, buttermilk, newspaper, hotels and lodges. Here there is just one condition, that the tariff should be less than 1000 rupees. 5% slab includes household necessities like tea, coffee, edible oil, packed food, apparels of value less than 1000 rupees, kerosene, etc. 12% slab includes processed food items like frozen meat, ghee, etc. and certain services like real estate constructions. Now let's move on to the next rate, which is 18%. This is the rate at which majority of goods and services classify. So it includes food items like cake, ice creams, non-food items like washing machine, and services like outdoor catering, telecom services, etc. And the last rate, that is 28%, includes luxurious items like cars, two-wheelers and harmful goods like cigarettes. Friends, now let's try to understand the concept of composite supply and mixed supply. One day, king went to a shopkeeper named John. So shopkeeper John used to sell clothes. So he used to take the packaging material, put cloth inside it and then transport it to a client, and used to collect 500 rupees. Now the question is, what rate of tax is to be collected on this 500 rupees? Because cloth is charged at 5%, packaging material is at 12% and transportation service is 0%. So here king gave a thought and he said, since this product is naturally bundled, the tax rate to be charged on 500 rupees is the rate of the principal supply, and here the principal supply is cloth. Okay. Looking at this, what John's brother, Mr. John too, what he did is he started selling fresh fruits along with the cloth. So fresh fruits are charged with zero tax rate. So he was saying that since I am also bundling cloth with fresh fruit, I will not pay tax. Then king said that this is not naturally bundled and this will be called as mixed supply, and in this case there will be segregation of cloth and fresh fruit and you will be charged the highest rate which is applicable. So in this case, on both the value which is the bundled value, the rate will be charged of highest rate which is 5% on the entire value. So to conclude, something which is naturally bundled, then the tax rate of principal supply will get applied. For example, in this case cloth is the principal supply, and something which is not naturally bundled, and in this case highest rate is applied which is 5% on both. Now friends, let's cover the last two concepts of GST: composition scheme and reverse charge mechanism. So the story goes like this. So as businesses grew in the region, it became difficult for the king and his 4 kids to collect tax. So what he did, he opened a bank account and asked everyone to deposit money in that bank account monthly. And for the record, he asked everyone to submit a return on monthly or quarterly basis. What is included in this return? Details of sales, details of purchase, details of tax payable by the businesses, and details of input tax credit that they are availing. And for big businesses who has business turnover more than 5 crores, king asked them to do audit on annual basis. And there are some small traders as well who has turnover of less than 1.5 crore. So these traders got fed up and they went to king saying that there were too many compliances. So the smart king came up with a solution. So the solution was composition scheme. King said that small businesses who has turnover less than 1.5 crore are required to pay tax at the rate just 1% if they are manufacturer or trader, or at 6% if they are providing service. But there is one catch, that they have to pay this tax from their own pocket. They are not allowed to collect this from customer, that's first. And second thing, they are not allowed to take the credit of input tax credit which they pay while making the purchase. So this is the concept of composition scheme. Now let's move on to the next concept, which is reverse charge mechanism. Friends, we have already seen what is reverse charge mechanism. In this case, instead of service provider, the service receiver has to pay tax. So this is just to shift the burden, and King GST has specified certain scenarios in which reverse charge mechanism is applicable. For example, one such scenario is wherein a company which is a registered company, registered under GST, that company is purchasing a good from an unregistered dealer. So this is where the purchaser has to pay tax. The other scenario is there is a list under section 9 subsection 3 of CGST Act, under which there are certain notified goods on which if you are purchasing them, then you are required to pay tax, and while paying tax you have to generate a self invoice. So this is the RCM, which is reverse charge mechanism. So friends, this brings us to the end of this module. So let's do a quick recap. So we studied what is GST, what are the rates of GST, what are types of GST, what is RCM, what is composite supply, what is mixed supply, and what is finally composition scheme. So this brings us to the end of this module, which is module 1. See you in the next module.